Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 23rd of May. It's been a week that we've tended to get used to in terms of recent months. Still, the main concern is, of course, around inflation, rising interest rates, and whether, in the case of the Federal Reserve, they'll be over-enthusiastic in raising those rates, thus tipping the country into recession. Inflationary and supply chain issues generally have been rather on top of investor sentiment, and indeed over the summer months the volatility is expected to continue in the absence of any positive catalyst. So in the year to date we're now in a situation where the Dow Jones is down by 14%, S&P 500 down by 18%, the Nasdaq is down by 27%, and the FTSE 100 is just keeping its head above water and has risen by 0.2% in the year to date. The corporate calendar in terms of next week is starting to slow down somewhat, but there are some companies of note and ones worthy of looking out for. The first of which is full year results expected from Marks and Spencer, currently of course a FTSE 250 company. Shares are down around 13% over the last year, much of that of course being down to the fact that it's a retailer and consumer confidence is currently weighing fairly heavily. That being said, last time we heard from them there seemed to be signs of an improvement in its previously beleaguered clothing and home section. Of course the food part of the business has long been a jewel in the crown, particularly now on the back of its joint venture with Ocado, so that's something else to look out for, and of course M&S's own opinion on the current retail outlook. Also, first quarter numbers from Kingfisher, another retailer, shares down 33% over the last year. When we heard from them last in March at their full year results, positive noises were coming out of its subsidiaries in terms of both Screwfix and indeed B&Q. But again, consumer confidence has been overhanging, and there are still some concerns that perhaps post-pandemic the DIY boom may have peaked at the expense potentially of consumer spending rather more on holidays. And finally, another FTSE 100 company, Auto Trader, has its full year numbers. Shares down around 6% over the last year. A couple of things to look out for. What we have been seeing over recent months is due to chip shortages, the difficulty in supplying new cars, so we'll probably get an update from Auto Trader on that one. Equally, strengthening demand for used cars on the back of that particular supply chain blockage. And again, consumer confidence, given the nature of its business, will be something where we can look forward to some outlook from the management. Thank you for watching. Have a great week.